Welcome everybody to my YouTube channel, The Bearish Bull. My name is Matt and this is my first video on my YouTube channel, which is very, very exciting. The main purpose of this video is to essentially show you my portfolio, and then going forward, I'll provide you with updates and all kinds of things like that. So if you want to skip to the part where I actually show you my portfolio on my phone, then you can by all means do that. But my goal for this channel is essentially to take you along with me on my financial journey, because I've learned a ton about finances over the last few years and recently have gotten very heavily invested, quite literally, into investing and the stock market. And I've already made many mistakes, and I thought if I shared my journey, one, it would be nice to document it and look back on it in the future, but two, it'd be great to meet and reach like-minded people like you guys to have discussions in the comments about anything stock related, anything finance related. And I think it's very, very important to keep on top of your finances, because I mean, you don't want to go broke. Now, if you're watching this, you might be very similar in the sense that you really discovered the stock market this year in 2020, because obviously initially the news was that the stock market has crashed. There was the big crash due to the global pandemic going around in the middle of March. I actually first got involved in the stock market right at the start of April, so obviously I've made quite a bit of money since then. But I feel like if you gave a monkey 100 grand, they could chuck it into some stocks and have made money in the month of April. I think anyone can do that. But even during this month, I've made mistakes, and I've really tried to work on my mindset for investing and what it is that I want to get out of my investments. And I have concluded that I don't want to be a short-term investor, and I'm going to have to work really, really hard to not let my emotions get in the way, particularly in the turbulent times that we're currently in, because I actually myself do see another stock market crash coming in the future in this year, possibly in about a month or so, end of May, start of June. Around that time, I can see the market going down. But as I'm investing in a long-term approach, essentially that shouldn't matter, because as long as I hold my stocks, first of all, any loss is actually an unrealized loss, because you don't lose any money until you actually sell your shares or the company goes bankrupt. But assuming you've done your research, none of the companies you invest in should go bankrupt. A recession just means that you can buy stocks in companies that you believe in, that you believe will make it through this downturn at a cheaper price. You can get stocks essentially on a discount. And having started my investing journey at the beginning of April, I've been able to do that right up until now, buying stocks at a lower price than they have been a couple of months ago. And the way I see it, if someone asked you in January, is it a good idea to get invested into the stock market? They would tell you yes. And if you invested in January, a lot of your stocks are going to have gone down in value at the moment. I'm just lucky that I got in around the start of April. So currently, my stocks have done quite well. Now let's take a little look at my portfolio. Currently worth $27,853. I started with a lump sum of just under $25,000 and put all of that into my Trading212 account. It's essentially like the UK version of Robinhood, because we don't have access to Robinhood in the UK. I know if you watch YouTube videos on stocks and everything like that, everyone uses Robinhood or M1 Finance. We don't have that in the UK. We have Trading212, and so far, I really like it. So the first thing you'll see is that it says investments 41, meaning that I own shares in 41 different companies. And that is very diversified, okay? I don't plan to add to all of my positions for the foreseeable future. I just wanted a firm base for my portfolio, because I know Warren Buffett actually says that by diversifying your stocks more, you're actually just professing your ignorance. And that's exactly what I'm doing. I've given myself a low risk base of a portfolio for a bit of security and to just have a firm base, so then I can build upon that with companies that I truly believe in the long term. All of these companies I do think will do well over the long term, of course. But going forward with either my monthly or weekly investments, I might only be adding to 10 to 20 companies as opposed to all 40. So we started with just under $25,000, and that's already grown quite a fair amount. And going forward, I aim to invest about $500 a week on average, $2,000 a month, and a further $24,000 a year if you keep it going, which with a return rate of 8% a year, which isn't totally alien in the stock market. I know times at the moment are quite difficult. That would see me get to $1 million portfolio on my 40th birthday, which would be pretty sick, not gonna lie. And of course, on top of that, I am going to be looking heavily into dividend investing, because there are some growth stocks in my portfolio, as you will see. But with dividend investing, whether the stock is way down or way up and you can get some gains and maybe sell some shares, if you have stock in a company, whether the market goes up or down, as long as they keep their dividend, you can get a nice chunk of money quarterly or monthly based on some companies' decision as to when they pay their dividend regardless of the stock price. And that's very cool. And I know some companies have cut their dividends, but to put it this way, with the investments in my current portfolio, assuming that all companies were paying their dividend that they've averaged for the last year previous, I would be making about $650 to $700 a year on dividends from this portfolio. Meaning if I wanted to make, say, $25,000 a year in just dividends, meaning that I essentially don't have to work or anything like that, I would need that $1 million invested equally across these stocks to achieve that. So it's very, very possible. I've got a realistic financial goal, and I think that's the main thing. But anyway, I've waffled on long enough. It's my first video, so I'm going to talk a little bit more. Let's get in and have a look at the portfolio. So this is just the top 10. So Carnival currently holds the lion's share of my portfolio. Tesla, number 2. Amazon, number 3. Nordic American Tankers, or NAT, number 4. Alphabet, number 5. Walt Disney, number 6. Realty Income, number 7. Facebook, number 8. McDonald's, number 9. And Visa, number 10. So let's go to my portfolio and we'll break this down. Now, before we look through all these, if I go to my month, here we start all the way on the left, just before I invested. I invested over time, slowly, got quite a lot of gains. And then, at this point here, I panicked. I sold everything. That was my first mistake, to be honest. I sold everything eventually, except my Carnival shares. You know, I had 200 shares. I still have 200 shares in Carnival Cruise Lines. I basically sold everything because I feared that a market drop was coming. And then I thought to myself, that's not the kind of investor I want to be. I want to be in the stock market. And there is a cliche that says it's not about timing the market, it's about time in the market. And yeah, that's kind of the basis that I've decided to take my investing on. So I took a majority of the money I got from selling my shares, including some profit, and put it back into the stock market in a fairly similar portfolio to the one before. There are some stocks I had here on April the 20th that I don't have now, and some stocks that I have now that I didn't have back then. But it was, first of all, the weekend I was very strongly considering selling with a $2,600 return, which is pretty good at 11%. But now, currently today, I'm at over $2,000 return on top of that previous $2,000 return at 8%. And the market actually opens in 7 minutes, and we're due for a good day for Tesla, at least, because currently at the close they're at about $800, as you can see, but their earnings came out and they blew the expectation out the water. So this will probably climb to possibly even close to 900 today. I think it's going to open at about 875, which would be, with my 3 shares, $225 return on top of the $260 in Tesla that I already had. But as you can see up the top here, there's not actually that much red. There is some red in Amazon. And when I initially invested in the stock market back at the beginning of April, I invested in Amazon at $1,900. And then obviously I sold for quite a handsome profit. But then when I bought back in at Amazon, it was pretty much at an all-time high, more or less. But that doesn't bother me because I believe in Amazon going forward, and they're such a giant in this world that I just think they are going to do well. So I just wanted a piece of the Amazon pie. So I don't mind that that's gone down. Alphabet recently announced their earnings. Again, blew that out the water and went from, $1,231 up to $1,340. So if we look through here, this is what we currently have. 3M, Activision, Adobe Systems, Alibaba, Alphabet, Amazon, American Airlines, Apple, AT&T, Boeing, and going through, obviously, you'll see some of them are growth stocks, some of them are dividend stocks, and you'll probably recognize a lot of these if you watch other videos on stocks and stuff, because I'm learning through YouTube as well, and I thought if I could just add my own little piece, my little input, I thought that'd be really interesting for you guys. So if there's any questions you have, then by all means drop them down in the comments. We have Canopy Growth, Carnival, there's my 200 shares. That was, this morning at 8:05. It was about £1.30 higher per share than now. So my return was like $1,000 for my 200 shares in Carnival. If you're wondering why my portfolio is in dollars, it's actually because I get paid through my job in dollars despite being in the UK. We have Cisco Systems, Coca-Cola, Delta Airlines, ExxonMobil, Facebook, Foot Locker, General Electric, Johnson & Johnson, MasterCard, McDonald's, Mercado Libre. That's one that I've not seen anyone on the internet talk about. It's essentially e-commerce for South America. It's like the South American Amazon, to my knowledge. And I did actually originally invest here at $454.50. That's when I first invested in Mercado Libre. I bought 3 shares in them, and I sold those 3 shares for a pretty big profit. So I was quite happy with that, but I did buy back into another share of their company. Microsoft, Netflix, NAT stock, Nvidia, Ocado Group, Palo Alto Networks, Pioneer, Realty Income, Shopify. Again, Shopify was another one that I initially invested on this Monday at about $450, and I sold it at $600, so that was pretty good. And then I bought back in at quite a high price. Southwest Airlines, Store Capital, Teladoc, Tesla, Unilever, Visa, Walt Disney, Waste Management, which I actually picked up yesterday, and Zoom. So that's my portfolio, and going forward I will still continue to invest. If you're wondering why the value at the top is higher, it's because I've got $760 in free funds. I did have $2,000 in free funds recently, but I picked up some more NAT stock and some Waste Management stock, and I believe a share in Johnson & Johnson. If we go to history here, there we go. That's the orders from yesterday. And there is a huge mental element to investing. Now, when I panic sold a couple of weeks ago, that was me seeing the downturn or even a potential downturn and getting panicked and selling. But then when I got out the market, I wanted to be back in. So it just proves that it was my emotions getting in the way. So yesterday, when some of the stocks started dropping, I wasn't actually nervous. NAT dropped from $7 down to $6, and I do have shares in them. And instead of freaking out and selling the current shares that I had, because I believe in the company, particularly at this time going forward in the situation with oil and everything like that, instead of selling those shares to try and make a bit of a profit, I actually bought more shares, even averaging up, just to get more shares in their company at a cheaper price, with anticipation of holding it for a longer time, growing in the future, of course, and they do want to keep their dividend, as their CEO said. Johnson & Johnson, the same. In a day where a lot of companies were showing green, Johnson & Johnson was actually a little bit cheaper that day. It had gone down a bit, so when I see red now, I'm trying to condition myself to think of a potential buying opportunity. Obviously, there's not going to be a red company every day, and I don't have to buy stocks and shares every day or every week or even every month. I could just hold back on some cash. But if there's a company that I believe in, that I've done my research in, then I will be adding to it when it gets cheaper to do so. Everything's on sale. Even if that means my $25,000 or so portfolio goes down to $15,000 or $10,000 in a huge crash in a month or two's time, I can then buy more stocks at a discounted price, which is, of course, dollar cost averaging, which is a method of essentially giving yourself better returns in the long run because you're buying a stock at a cheaper price than you initially did. So the average price you pay for that stock goes down, and then you also get the returns when they grow. You have more shares, all that good stuff. So the point I'm trying to make is, because I'm planning to invest in the long term, the market will go down, and I have to expect that. I have to enjoy the gains. They're great. I'm not selling any shares at the moment, so they're unrealized gains. I'm not actually getting richer. It's just that my savings are worth more currently, right? But then when the market goes down and essentially my savings are going down, that's just an opportunity to buy in at a lower price. So that's sort of like a brief and abridged version of my investment strategy and my investment portfolio. So please do drop a like if you enjoyed the video. Drop a comment down below, just telling me a little bit about yourself and your investing journey. When did you get started? What's your plan going forward? And I would love to hear from you. So that is going to do it for my first video. Let me know how you think I did, and I'll see you in the next one. I don't know when it'll be, but I'll see you very soon.